Hello everyone and welcome. Thank you for joining our technical analysis webinar with Trevor Neal. As always, the webinar will take approximately 30 minutes of your time. And don't forget, if you have any questions for Trevor, you can ask them in the questions tab of your GoToWebinar widget window thing. We hope that you're continuing to find the handout useful. We've attached it again this week that you can download it in the handouts tab. The handouts tab for me is just a little bit lower down than the questions tab. If you click on there, you should be able to download a PDF. It'll explain what each of the indicators are on Trevor's charts, and it'll help you understand a little bit what's going through Trevor's mind when he's looking at these charts. For those of you who don't know him, Trevor is a veteran trader and technical analyst. He's been in the business for over 40 years. In fact, I think it's closer to 50 years now. He managed a large hedge fund in South Africa and has worked as global head of technical analysis at Bloomberg. And he's also the founding member of the Society of Technical Analysts in London. So we're in experienced hands. So let's get started. What are we looking at this week, Trevor? A multifaceted approach to dollar weakness and less obvious ways to play it. I like that this week. Seems like we've got something interesting coming up. Gold not performing as it should be, surprising to some, I imagine. And stock of the week this week, HSBC. It's a new one for us. What we'll see a 5-year downtrend giving way. What next for the British banking giant? Trevor, take it away. It's all yours.
Okay. Right, thank you very much indeed, Dan. Let's start with the euro, but the euro is not the place which is benefiting the most from the dollar weakness. We've got a reasserting of the downtrend in the dollar, the long-term downtrend. We did have a significant rally in it in the past. Now that's petered out, and the long-term downtrend has reasserted itself, but it's showing in different ways in different markets. Here in the euro, yes, the euro is steady, but it's not, running away or anything like that. It's very much range bound. We have up at the top here 119.45, down at the bottom 116. It's still in that range, and it's pushing towards the top because of the dollar weakness. But really, the response of the euro to the dollar weakness has not been that dramatic. So one would expect continued euro strength, but if you want to play that game, you should be playing it elsewhere. Moving on to sterling, into cable. Sterling made a good break last week and broke through this resistance level, 31.50 level. Then in the middle of the week, it turned down quite sharply and retested it, and now I believe is bouncing. So this old resistance level has become support for sterling. I think sterling is one of the beneficiaries of the dollar weakness. The MACD looks good. The RSI is okay. Let's put it that way. It's still rising. It's not overbought, and it's still rising. And the trend component is moving up, showing the early stages of a trend in development. I just said before I leave sterling, I'd like to go to the weekly chart just to remind ourselves of what's at stake here on sterling. We've got a very, 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 very important level here at 133. So look at this, March 2019, November 2019, again rebuffed in the summer, August 2020, the 133 level rebuffed us, and we're moving up towards it now. And so there is a lot at stake here. If we can break that level, although that level in itself looks not that important, it is because of all those other times that 133 level has rebuffed the market. And I think that if we get a great hurrah, if we get an agreement with regard to Brexit, then that could take us through the 133 level and could make us sit there with that then becoming a big support level, having been substantial resistance becoming a big support level. I'd like to look at Swiss franc. Swiss franc is sort of the place that you would expect to be heading if you were looking to benefit from a weak dollar and looking for a strong currency. But what you've got to deal with here is the Swiss National Bank and its line in the sand at 90 here. Every time the Swiss franc gets up to 90 or the US dollar gets down to 90, they intervene and the market reverses very sharply. It's the pressure is on for that 90 level. Whether they can keep holding it or not, I don't know, but you have to respect their aggression when they intervene, and so don't get on the wrong side of that. So this is not really the best place. We've yet to find the best place to participate in the dollar weakness. Let's look at the Norwegian crown. Now this is somewhere. Let's look at the weekly one first on this. So it's the US dollar here. So moving down is Norwegian crown moving up. We've had those two tops in there on a weekly basis. I think we've got a double top in play. We've breaking the pullback between the two highs here. I would measure from the pullback to the two highs, and that will take us right down actually through 88, which is a very significant level. Bounces here, and then previously it was a resistance level for the dollar. So this can be very exciting here now. So the Norwegian crown went down, has rallied. I think the rally is over. It broke the pullback between the two highs of the double top, retested it. I think this is a retest. And for those of you who like retests of breakpoints and like to use that second chance to enter, now's your moment, today's your moment. And the minimum price objective from the height of this pattern, from the two highs to the pullback, takes us down to 870, right down at this low here back in August. So this is, let's say, a more leveraged way of participating in dollar weakness if you go along with my analysis on it. I will now go to the yen.
Can I just stop you for a second, Trevor?
Yes, sure.
We've had somebody saying no audio. Is it just me? Can people hear? Please, can you put like a Y in the questions tab if people can hear, so I know that everybody can understand what's happening? Because yes, we can all hear fine. So that the gentleman that asked if there was a problem with the audio, and he said, "Is it just me?" I think it is just you. So maybe you can adjust your settings on your computer. Maybe you can hear us fine.
Okay.
Sorry, Trevor, please continue.
Okay, thanks. So here's the dollar yen long-term charts, weekly bars here, and we've got this long-term downtrend, high, lower high, lower high, lower high, lower high, and once again this trend line has been restated, reaffirmed, and we've turned down that is down in the dollar, up in the yen, and I think this can extend much further. Going to the daily chart. I'm sorry, that was the daily chart. So here's the weekly chart showing the long-term downtrend. Here it is stretched out on a daily chart, and so we should head lower. Be aware of the support at 104, but we've probed through it previously. I think we'll do it again. So this again would be a good place to participate in the dollar weakness play. The next one I'd like to look at is commodity currency. I'll take the Australian dollar, and this here, the Australian dollar is first, so rising value is a rising price of the Australian dollar. Firstly, the weekly chart, we had this big jump from March here. We pulled back, formed this pennant, if you like, or symmetrical triangle, if you like, but I think that 2 weeks ago we broke out of it and we're on our way up, depending on how you measure it, but at the very least we should see a move, the height of the triangle here, which would take us, swing us through the high here. On now going back to the daily chart. So I think we're on the way. We've had a little rest, and now it's getting another resurgence of energy. The RSI is looking good here, and I think that we're starting another leg after this pause of last week, and we should swing this time through the August-September high over here. So this is a more leveraged way of participating in the play for dollar weakness.
We have a question, Trevor. We have a question here, Trevor, from our great friend Noble Thomas.
Oh, good man.
He says, can we expect a pullback?
And is he talking about the Australian dollar?
Oh, I assume so. He hasn't said.
Yeah, I think that we've just had a pullback, and it was very weak, the pullback. I'm talking about this area here and where it paused. And I believe that today's move, and that we're seeing here now with this big white candle, is a resumption of the trend after the consolidation. And so the pullback is complete and we're on our way. It wouldn't be surprising to see some sort of consolidation at the previous high, which is only a little bit above us here. But honestly, the previous high, I think, is not going to present any significant resistance. We were there very, very briefly, and so I don't think there'll be a lot of profit taking to be done at that level. And so I think that we will pass through it. And I think putting all this activity below at your support. So my intuition is that it's on its way now, and today's the day that it moved out of the consolidation, and we could have another leg as long as this leg here upwards and this consolidation is finished, I think. So I think waiting for a pullback might be costly.
Thanks. Maybe we can take this opportunity as well to remind people to download the handout, because we've got a handout that we have every week for the webinar, and a lot of people have arrived late and maybe didn't hear what I was saying at the beginning. So we've gave a handout today in the webinar that you can download that will assist you with understanding the different indicators that Trevor's talking about when he's looking at the charts, and you can download that in the little handouts tab on your GoToWebinar program. Sorry, Trevor, continue, please.
No, it's okay. Please do download that, because I do change the standard values. For example, the RSI is not 14, 30 and 70. I use different values for it. So what are all these moving averages? They won't make any sense without the handout, but I don't want to spend time every week telling everybody what all the values are that I'm using. But thanks to Noble, who's my new best friend, last week he pointed out the euro yen. Now the euro yen last week, the very day we were talking, was this candle here, and it was powering ahead extremely strongly. Since then, actually since that day, since last Monday, it's drifted back. But let's look at the what we were actually seeing there. We've got this big pattern here. This is going up here is euro strength versus the yen, and then we've drifted. And I think you could draw this in various ways. I know this is a bit rough, but I'm going to draw it as a trend channel. It's not very well drawn, but that's the pattern that we've got. I would normally make these, and I will make them dashed lines to show that we haven't got our 3 points on that we really like, but definitely there's a drifting pattern there. So what we're seeing in the daily chart is within the context of that. That is that pattern there, and then we've got the same minuscule fractal pattern in here. I think that that this pullback here is a very weak pullback, and we are likely to resume this move upwards, this impulsive move. It's just a correction and absorbing of the extreme bullishness of last Monday, and I think that any day this week we will have another very powerful candle, white candle like the one that we saw last week. So I think this is definitely one to keep on your radar and watch. And we saw how big the moves can be in this one here. So we've done the Australian dollar and New Zealand dollar versus the Japanese yen. And then just a final word about this, the place to leverage most from the dollar weakness is in the emerging market currencies. That's where you're seeing the biggest moves. So if I were to, let's take the Rand, for example, here, and I'll go to the weekly chart. And so this falling prices here is dollar weakness and Rand strength. And look at this here now. That's a completely different chart to what we've been seeing in the European and closer to home currencies. So if you've got the intestinal fortitude for it, this is the place to play the dollar weakness game. And if we go down to a daily chart here, we had this move down in the dollar, then we've had a little bit of a pause, and I believe that the move is reasserting itself now, and we're starting to just starting today, a new leg lower, which will take us to new lows for the dollar. And it's a similar pattern in the Mexican peso, if you prefer that one. So here's the weekly chart. Look at this here now, just going down, maybe not so powerfully as the rand, but on the daily chart here again, powerful move down, rally. To me, it looks like the rally is complete, although this particular candle is a little bit steady. So of the two, I'd prefer the rand. Now, we can't leave the currencies without mentioning our greatest friend of all, our biggest pal, which is Bitcoin. So we've been bullish of this, and now we're breaking level after level on it. Here's the weekly chart on Bitcoin. Week after week of powering ahead here, breaking the July 19 highs. We have to look further back, further left on the chart, and this takes us back to the next level that we're likely to come across is the December 2017 high, the all-time high. And frankly, I don't see much resistance between here and there, or the high itself presenting significant resistance. The high was made very, very quickly. It was a V-shaped top there was no consolidation. We spent no time at all there. So I think that most of the buyers were in this phase here, and very few were buying into that Christmas period. More people were selling, which caused the drop that followed immediately there. So I think the weekly chart still looks extremely strong. The MACD, very positive here. The RSI, yes, it's overbought, but I hate that term, because what it really is going up, the RSI is going up because the market is strong. It is when it turns down from that level that you've got some message that the extreme strength has given way. Just going back to the daily chart again, very interesting day today. We opened lower, and then it looks as though we're going to finish extremely strong today at a new recent high. Very, very good candle there. The trend is extremely strong. We've got an ADX reading of 49. That means we're in a strong trend, which is up as defined by the weekly RSI, weekly MACD. The RSI is looking good here, holding well up here, very well indeed, and even the MACD, there's no sign of weakness in that either. So all looking good, and yes, there's resistance, but it isn't strong resistance. So I think there's a blue sky ahead of us on this one.
We have a question, Trevor.
Sure.
We have a question from Denzel. Thank you for your question, Denzel. He asks, please, which of the pairs is mostly dangerous trading in the month of November?
Does he mean from a cyclical?
I think I'm not sure. I'm not sure.
Denzel, let me make sure I understand your question correctly. Do you mean specifically most dangerous in November, the month of November, or do you just mean at this moment?
I'll let you know if he gets back to us on the.
If he come back. There's two different questions in a way.
Mm-hmm.
Let me start with the S&P. So we've got lots of cheer in the world at the moment, but now with new announcement of a second vaccine, Moderna's drug is now seemingly very effective and doesn't need to be stored at minus 80 degrees. So this is terrific. So here we are breaking to a new high following the Dow Jones, which had already done it. It's looking good. We're gapping higher. It does look good, but there's better elsewhere than this one. But look at this, it's not across the board, this strength. This is the NASDAQ, the tech index, and it's not at new highs. And so we've got this rotation out of the tech stocks. This is a big change in the structure of the US stock market. The US stock market for years, literally for years, was driven by the FANG, a small group of stocks, which were the big drivers. Those stocks have significantly weakened. The broader 500 index, which is made up of many securities that are not technology related, so many old industries and car companies and makers of turbines and things like that, and it's overtaking the technology centered index. And this is a rotation of thematic rotation in the market towards value, away from momentum related securities. And I think this will be a feature also for the future, where this driver coming only from one source and one limited source with only few securities in it is changing in the market. But still, the market overall will, I believe, remain bullish.
We have some clarification, Trevor, on this.
Yes.
I think he's talking about this month particularly.
In this month, so volatility this month. I think the volatility of this month in markets in general, not just the foreign exchange market, but markets in general, it's going to start to decline. And every year, I've been presenting year-end reviews and having a shot at projecting the year ahead. And we will be doing that here too. And every year in recent years, I've said that I think that next year is going to be volatile. And actually, I'm going to change my tune here. I think that next year is going to be less volatile. And I think we're already seeing the early stages of that changing nature of the market, the fear in the market declining for a number of reasons, which you can imagine, which are changing right towards the end of the year. So the structure of the behavior of the market next year may be very different from it has been today, when where we've had Brexit, where we've had Trump, where we've had coronavirus, and so forth. All these things will be last year's problems, and I think that will reflect, one of the ways it will reflect itself is through a reduction in volatility. So I hope that answers the gentleman's question. So here we're looking at the FTSE. FTSE, wow, great, love it. FTSE, we began to love last week, of course, when it made this big breakout of the flag. We're technical analysts, we love flags. Flags we love because they tend to do what they're supposed to do when you see them, and they're perfectly formed. We had the March low, came up to the June high. We came back, and this is one for your album. If you're a technical analyst and you have an album of beautiful patterns, we retraced 61.8 on pretty well on the nose. The projected number was 5521. The actual low was 5525. I mean, how good is that? And that would have been projected from the point where you saw that was the low and that was the high. So any point in this drifting period here, we'd have done the Fibonacci retracement. 38.2 didn't hold. 50% took the price took no notice of it, and as often is the case, when it breaks, it lurches to the next level, which is was down here, the 61.8. It held there, traveled up through the flag. That was the last oscillation through the flag. We broke out very emphatically, very importantly last week, which we noted. And I think that this is the new flag pole, the same length as this one here. And you know, you can measure this for yourself, but you see where it takes us. It's back into this consolidation area, this multi-year consolidation area up here. And this is, again, you know, if you buy into this idea that the structure of the stock markets are changing away from being driven only by technology stocks and at the expense of the old world stocks. Well, the UK FTSE index, the FTSE 100 index, is made up of that. It's got almost no technology in it. It's made up of financials, minerals, industrials, and energy. Everything that was out of fashion in the market, it was made up of. But this is an example of what I mean, this rotation of, now we like those things, and we like energy stocks now, and we like industrials, we like financials. The banks are beginning to change. After hating the banks for so long, you might actually have to learn to like them again. That seems hard to do because it's years that we've disliked the banks. So I would like to, because I'm running out of time here, I'd like to go to the Nikkei and look at the Nikkei. We saw this, we knew the importance of this level. The Japan 225 weekly chart here, it's only 3 weeks ago that we made this break, and there was no missing it. 1, 2, 3 times we'd been turned down from it. Now we've surged through it and down and up with gaps and powering ahead. You know, got all the signs of strength. Of course, there's room for pullbacks here, and we will certainly have pullbacks. But at the moment, the strength is still with us. The ADX is great, showing that we've got a strong trend. The RSI is really fantastic and pointing up. The MACD is pointing up. Everything is pointing up in this now. There's plenty of room for it to come back and fill some gaps, yes, but this was a very, very important chart breakout of multi-year implications, and another sign of this move towards Asia. Asia is the future and will be the theme of the future. I'll talk more about that soon. So very quickly, before I run out of time, here's gold, not looking happy. I mean, gold should be doing much better. If we've got dollar weakness and people are looking for assets to participate in, we should see some strength in gold. It's a little bit steady, but it's not really very strong. I'm more worried of it breaking down. If there's any strength in the dollar, this will make the gold quite vulnerable. So watch the $1850 level there. You can see how important that will be. It could possibly suffer an unpleasant tumble back down to the 50% level here at 1760. There isn't a lot to stop that happening. So watch out, where the gold is surprisingly under threat. So I've got enough time to look at crude oil and my stock choice, which is HSBC. Here's crude oil. We have bounced from that terrible, recent terrible sell-off we've had amongst other terrible sell-offs, but we surged very, very strongly here. We're testing 1, 2, 3 tops in here, and then we pull back from it last week. Again, we did go through it, but there's only a shadow above. We rejected above it. Watch this level for a release of a lot of energy, putting that big area of support from September and October below us. But we have failed before. Maybe we're going to fail again. So watch that. And then very quickly, I want to go to HSBC. I've got this thematic rotation, looking for stocks which we've hated for so long. The banks, they were just trash stocks. Look at this pattern it's had here. Now, I think we've got a significant change in the nature of it. So get used to liking banks. The question is to choose the right ones, because not all banks have done the right things and to slim down and build up their capital base and close down their branches and become more digital. Some have done it more than others. The price will tell you that. Everyone will claim to have done it. But here we are powering ahead here. We've already come up a lot. We're breaking out of a big base here. It's looking good to me. We did have at the end of last week a little pullback, which was a buy opportunity for those sort of nimble traders, but I think we're on our way again, making a new recent high today, and I think that HSBC will be one of the leaders in the banking sector of things which we have loathed for a long time, and we will have to learn to love in the future. Thank you very much. Any questions?
Yes, we do. We've got a request to take a look at the Dow Jones. So this was the US 30 that we have.
Okay, yeah, sure. That's probably all we have time for, but glad to do it. Now, the Dow Jones was the first one to make a break to new highs. Let me go to the weekly first to show you that. So last week we made a new high. We had what alarmed a lot of candlestick people here, a long-legged doji there, which can be a topping pattern in the market, but we have to break the low of that, and there was a gap, a very significant gap there, but it doesn't seem to be happening so far. So here we've got the gap breaking to a new high. That in itself is strength. Pullback, retesting it, holding Friday, Monday, pushing ahead to new highs. I think it looks strong, and you see you can count all this now, this consolidation here, as a big base for it. So if it does pull back again to this area 29,200 or so, then it will be well supported. Well, around 2,900, it will be well supported if it happens. But we're moving up well now. We've got the moving averages in the right order, 20 above the 50, above the 200, the RSI pointing up, the ADX moving up, not yet too high, but I think it will get high. And the MACD, of course, is steady in both the weekly and in the daily charts. So this is looking good here. I mean, don't forget that every tide has waves, and not all the waves are in the direction of the tide. So we're going to have zigzags like this, but at the moment, there's not an indication that it will be today.
Trevor, thank you very much. I think that's all we've got time for this week. Of course, join us again next week, same time, same place. We'll be here talking about the charts. Also, I'd just like to remind you as you leave us, please take the time to fill in the survey at the end. The survey is actually about the handout, which we hope you've all downloaded and are looking over it. And also you can give us any suggestions and any feedback in ways that we can improve the handout, and it'll improve the experience for you and it'll improve the experience for us. So please do take the time to fill in the survey. Trevor, do you have anything else to add?
No, I haven't. I just want to thank you and Dan for looking after us so well, and also to everybody that's taken the time to attend. I really, really thank you, and I'm flattered that you've done so. And the markets are interesting, very, very interesting. I shouldn't get too excited about Bitcoin. Of course, we'll have pullbacks, and it's not going to be a one-way street.
So we're not all going to be retiring next soon, are we, Trevor? When we sell Bitcoin.
Yeah, I'm still working. But I will end with my normal blessing, which is may the trend be with you.
Thank you very much, Trevor. Thank you very much, everyone. Goodbye now.
Thank you very much. Bye.
Bye-bye. Bye.